type day in that the Janet Yellen will be speaking to the Congress Finance Committee, and expect a lot of volatility during our session. That said, Brandon's going to be on here with us as well. We'll be talking about some of the patterns he's been watching in the last while, some things we've been discussing behind the scenes, and should be a very interesting time here. Just want to start off everything by saying that neither Darren, Brandon, or myself are commodity trading advisors, and nor anyone affiliated with Avenge. We are here for informational, educational purposes. Trading Ladder is in simulated mode for educational purposes. We do not direct trades. Avenge does not trade funds on behalf of any person or any entity. We are here to help teach people what we have learned and how we've developed the track record that we had over the past couple of years. Granted, the last while has been much more difficult with greater volatility in the markets, greater range. We are in unprecedented times, but exciting times too. And hopefully our discussion here today will help understand the charts more. Oftentimes when one, Darren or Brandon, if you're on here as well, when one starts, I know when I first started looking at the charts, it was a bit overwhelming with all the different components that were here. And oftentimes with newer people, when they start out, we just try to focus on some of the ERG charts, maybe the 10-5 ERG. This is what we did in the past, some of the couple of the bias charts. As time goes on and your eye becomes more familiar with the price charts, the ergodic, the bias, the attack charts, your brain starts to be able to take in more information at a time, almost like a pilot's dashboard. And as time goes on, you can start to filter out information quicker, more qualitatively, and people actually come to a time where they can actually look at all the ergodic, bias, and attack charts, and in just a couple of seconds, very quickly ascertain different details, different perspectives, different views of the market that each chart is showing, and being able to pull that all together and get an overall view of a shorter term view and even a longer term view of where things may be headed in. And that's just some of the things that we want to touch on today. Brandon's been looking at the attack charts a little more. He'll get into that in a few minutes. We've been also talking about and we've been talking about this over the last few weeks. Sometimes some of the setups seem very strong, but there's no signals, or we have certain components that are there that aren't part of a tracking setup that we have, and we just want to touch on a lot of different elements today in a way that we normally don't touch on. Again, keep in mind today is a fetish type day, and that Janet Yellen is speaking to the Congress Finance Committee, and therefore we can have sporadic moves in the market. We can have the market sometimes jump in the opposite direction, 3, 4, or 5 points, not unlike some of the things that we've seen over the last few weeks as well. But we may be in a nice trend, and then she will answer a question in a way that will push the market in the opposite direction for a short time period. So Brandon, Darren.
Good morning, Greg. Thanks for that intro.
Not a problem, Brandon. Glad to have you on here today with us.
Thank you. So we've been talking about this for a little bit, that we wanted to have an analytics broadcast, and essentially before we begin, I'd like to say that the moderators are two very experienced traders, and we're very privileged to have them with the Avenge team. They've been watching the market for years, and they've seen the market in very high range days, very low range days, very high volume days, very low volume days, and they've seen days when there have been Fed announcements and there will be a 20-point candlestick replot on the 317 tick chart in the split second, and they'll be on Fedish days where absolutely nothing will happen. So we've been through a very wide range of markets, and today we're going to talk just a little bit about what we've seen so far in the year of 2016, specifically in January, but also in the beginning of February so far. And the goal of today is to be able to provide information, just pure, unfiltered information for all of the viewers on today's webinar, so that we can talk about everything that we see on the charts, not just look at one set of rules or one method, but talk about all the little nuances of information that we can ascertain from our charting. We'll be going through that throughout the rest of the session. We highly recommend that you be taking down notes as we go over information about how to read the charts, how to interpret the charts, how reliable our interpretations are of specific information. And if you have any questions, please ask those in the question box. We'll, of course, be taking questions throughout the day. And when we get towards the end, we'll be leaving a bit of space so that we can specifically be answering any questions as they came up throughout the session. Also want to cover really quickly that even though today is a Fedish day, we're going to accept that knowledge and work around it. Fed day is a day when we foresee that there will at least be one extreme interruption in the market trending that we're looking at. And usually that's at around the exact same time as the Fed announcement. And usually that will be a 20-point candlestick replot on the 317 tick chart. If you're looking at it right now, it's ticking in one or two ticks of into the red on the 317 tick chart. On a Fed day, giant leaps are pretty common. On a Fed-ish day, it's somewhat of a less measurable amount and less determined amount of emotion on the market. So if we're looking at a fairly reasonable market as we are right now, we've had green tens indicating a general trend upwards for the first part of the market, which has been true. We've had some indication that the market is turning around now, with the fives starting to turn red, the B bias showing some strong angle downwards, and the market is indeed turning around. We've bounced twice on the top, and then we're starting to show some red pressure now. So at the moment, we can see that the trending is fairly good to work with, and we're, of course, going to be talking a little bit more detail about that. But know that even though today is a Fed day, we're going to be talking about trending and how it relates to the market, or non-trending and how it relates to the market and our trading specifically. So that's where we're at today. Darren will be on with myself and Greg, and we're going to be talking about what we think is going to happen. We're going to be talking about the trends as they come in, and we're not going to be taking any trades necessarily today. Today is going to be a purely theoretical session. So again, please write down any questions you have. Please ask them in the question box. And we're just going to jump right in. And I'm going to start off by talking about my new favorite interpretation of the charting. If I can draw your attention to the B bias right now, as well as the 5 erg chart. We're looking at the 5 ergs at the top of their range. This is my favorite time to be entering into a trade. When we know that there's a building amount of pressure and that there is potential for a future shift in the market, as there is right now with the 5 starting to turn red, that is getting in right behind the building pressure is very key sometimes in locking in the large amounts of movement before they go. So right now I'm going to put a marker in at 6200. This is not a trade. This is me just tracking how the market is performing under these trends. And the reason I say this, if you look down below the 5 ergs and the B bias, which definitely indicate red pressure, we're looking at the H attack, which seems to be missing the title of its chart, but that is indeed the H attack. And the H attack is showing the red line about to be crossing the green line. Note they have not crossed yet, but in the near foreseeable future, just as in the near foreseeable future, we expect the 5s to continue turning red. We are expecting to see some pressure build up in the 5-minute interval that we have from our predictive charting. So because of that incoming interval, in the 5 minutes, expecting to see some red pressure, now we're going to look at the rest of our charting and see where we're at. Now, if you look at the J attack, let's look at the J attack, the 1 ergs, and the D bias, our 1-minute interval trend. If we're looking at the J attack, the green line actually just replotted weaker, but that green line crosses over the red line, and the green line overtakes the red line, then we're going to see a 1 minute shift from sellers having bias on the market to buyers having bias. Excuse me. So with our 1 minutes also at the bottom of their range, and even if you look at the rest of our scalping charts, then we're seeing that short term, we're pushing upwards. So that gives us two sources of information. Actually, if you look back at the H attack, which again is missing its nomer, if you look at the red line, it actually replotted on top of the green line. Actually, this is very important to write down. This is a rare occurrence that does take place a few times, at least a day. When you're looking at an attack chart about to cross, or if you're looking at an ergodic chart about to turn, when you see it replot, as it just did at the 10:10 mark, and you see that it has not gained the exact angle or power, if you will, in the direction you were hoping for, that gives you two indications. One, it gives you an indication that there's short-term pressure at the very least in the opposite direction, as we just identified with the J attack chart, the 1 erg chart, and the rest of our scalping charts showing some green pressure. The other source of information it gives us is it's possible that that trend is still going to appear in the near future. Now, also, some even stronger information that's just developed while I was speaking. You can tell this is a little bit of an exciting line of work that I do. I do enjoy my job. I like pattern analysis, and I enjoy watching the charts. The eye attack just came in and developed so that there's a green cross. The green line came on top of the red line. So as the eye attack is in our 3-minute column of trending, over the next 3 minutes, we expect to see somewhat of a trend upwards. And as that replot took place at 10:09, and we just had another replot at 10:12 Eastern Standard Time, and the yellow clock in the top right corner, we just had another replot with the eye attack showing the green line weaker than it used to be. We want to see the eye gaining strength in one direction to be able to trust it, so to speak. Now, if I can draw your attention back to that J attack, which had crossed green just a moment ago, it's now about to cross red. And now we'll want to keep an eye on our H attack over on the left side as we were watching that trend earlier. Now, the J attack has not crossed just yet, but we've already seen a little bit of pressure start to build. Also notice the K attack about to cross. Also notice the volume ergs starting to turn red. Also notice the tick ergs turned red. Also notice the L attack and the F bias showing short term there may be a little bit of green pressure. So right now is a good example of a moment where we have a lot of information and it's not all aligned. We have our K attack, our volume ergs showing red pressure starting to develop in. We see our E bias in that same column showing green pressure. So there's conflict within the singular column. Now, if we look over to the next column on the left, we're looking at the 1s showing pressure upwards. We're looking at the D showing just slight pressure upwards. We're looking at the J show that the red line and the green line are coming closer together, indicating they would be likely to cross in the near foreseeable future. So right now, if you were looking at considering a trade, you would step back and say, we have potential red pressure coming in, but we have a lot of potential pressure both directions in our smaller charts. So right now is not a good time to be entering a trade. Then what myself or what the mods will do, or any of our analytics team while we're watching the charts and theorizing, we will say, okay, right here, either this can go up or it can go down. We're going to write down exactly how many charts and which charts are showing green pressure. Then we're going to write down how many charts are showing red pressure. And then we're going to see which direction the market goes. So here we'll sit back, we'll wait for the next couple of minutes. We're going to see another replot of that H attack and the 5s in just 30 seconds. And then from there, we're just going to see what happens. We'll do a test trade, so to speak. Earlier, I set a marker at 63, talking about how that H attack was likely to cross, and seeing as it didn't, and in fact, there was actually not a replot, just an angle adjustment on the H attack showing separation. That 63 marker for a red trade, which is what I was talking about with the red H attack cross, would not have paid off. And that was because short term we had a lot of green pressure developing in our scalping, and even in the 3-minute trend we had an eye attack cross. Someone's commenting that they think I had said 62. That's actually possible. I may have said 62. I didn't write down that exact moment. I'll be writing down any markers I put in the future. So there's the replot, and the H attack is not showing us any more helpful information. And in fact, if you look at the 5 ergodic chart, one line is red, one line is green. That is a marker for chaos, meaning we're not exactly sure what's going to happen on the market in the near future. So then we have to do one of two things: look for our other charts, or sit back and wait until that measurable amount of chaos corrects itself. So I've just been saying quite a lot of information. I'm going to slow down for a moment. I believe Darren is on here as well.
I am.
Hey, Darren. Good morning.
Good morning.
So what we're going to be doing from here on out is we're just going to be theorizing. A lot of what I just did was theorizing about what the market is going to do, and I've been talking about little pieces of information that may pertain to what I'm talking about. One other thing I want to talk about real fast before we keep going, the H attack, which is again missing its title. That'll be something that our tech team will be working on hopefully after the session. The H attack is at the bottom of its range. The attack charts show, both of the lines on the attack chart show when they show volume. And when you're looking at the green line on the attack chart, as it goes lower and lower, that means less and less people are buying on the market. And when you look at the red line going lower and lower on the chart, there are less and less sellers purchasing short contracts on the market. So when both of them decrease, like how we see on the H attack or even on the I attack, we're seeing decreases in volume, then the market's going to slow down. And in fact, we're consolidated, which usually lines up at just about the same time when we see our attack charts go down. So at the moment, that's kind of our basic 15-minute overview of the beginning of our session. And from this point onward, Darren, Greg, and I will be alternating, just talking about the trends we see, what we think the market's going to do, and where we believe the market will go from here.
Good, Brandon.
Excellent.
Good to hear some extra information regarding the attack charts. It's not something we talk about much or have as part of our regular setups, apart from the EK. We used to have that. The K attack is part of our scalp setups.
It's interesting. There's a lot of pressure upward here without really any indication that holds in our charts, really any of them, except for the 10 minutes that have been up this whole time. There's that move through in a bit of a retrospect fashion. We do see the D and the volume and the tick, and then the E and the F spiking there as well as it pushed through, oftentimes as we see it move through a point of stronger resistance. And not only have we tried to do that for the last 10, 12 minutes, it also tried to do it before the session started as well at this level. So interesting to see, Greg, Brandon, we've often talked about looking for strong indications, where we see the 1D now, the C, separation on the J. All of those did not come in at the time of that, and well, there was multiple indications of that, and it bounced off and didn't cross the way it has. All of those times it bounced on that 67, 66, 75. And then when it eventually moved through, there was no indication for that except in a retrospective fashion. There was some chaos in the market with particularly the testimony of Janet Yellen. Just whatever may be coming out of that, we see and can see some real non-trending jumps. Brandon referenced that big instance on Fed days around the 2 o'clock Eastern time mark. Well, when there's testimony going on, it's almost like there's little mini events like that throughout the course of testimony. You may see a trend happening, and then suddenly it moves significantly in the opposite direction, and then back into the direction that you were originally looking at. And that's news or whatever is being said in testimony coming out of that particular congressional hearing. see a dramatic change in our B. Our C saw a change in, first of all, our J attack, which came well up into that range, as well as the I now. In retrospect, we have moved ahead, what is that, 4 points almost on that piece of information. Now settling again here. Go ahead.
Very interesting. A and B bias is still flattish or even angled down. They are deeper in the green, but when that plot came in at 10:20, the new candlesticks, they didn't change too much either. So we may be near a peak, and maybe part of that push up was due to something that she said that coincided with the consolidation we were in. The market was waiting for some sort of indication for it to make some things clear. I know in the past I would sometimes have her speech. It was interesting when you said a hearing, Darren. I know your background, someone's testifying is a little different than this is. She's with the House Financial Committee, and it's a testifying, just answering questions from different House members. And tomorrow she'll be in front of the Senate, oftentimes not as volatile as today, because all her information is pretty much being released today. It's interesting to sometimes have that on in the background, and certain things that she will say or the way she answers certain questions, it's almost immediate. By her tone of voice, you can see the market shoot up or drop.
It's very interesting here right now, Greg. We've also talked about having the majority, if not all, of the scalp charts coming into alignment, particularly with the E and the F going into red. D is still pretty high in the range. Volumes ticks are low, but oftentimes when all of those come together, we've talked about 4 of 6 in the past, but even as we get upwards of 5 and 6 of 6 in the past, even considering some of the K and the L attacks being part of that mix as well, we see almost an immediate push in that direction. Now, we had migrated down from that 70 by a couple of points, 2.5 points.
Okay, we had come to a point of resistance, the bounce spot previously.
Yep. But those, as a sort of a perfect combination of things, can have a real impact in that direction. Oftentimes those are difficult to talk about because they can happen so quickly. And so those are ones that people are looking for that particular scenario.
Very quickly, if I can draw your attention. Very quickly to draw your attention to the J and the K attack. We saw them cross over onto the red within the last minute or two, and we saw a pullback of about 2 points from the top of the market. And now the K attack is drawing closer and the J attack is drawing closer as well. And we're about to see green crosses, but we're about to see them at the same time. We're about to see a double cross. Now, if I can also draw your attention over to the 10-minute chart in the top left corner, if you look at the value of where we are currently on the market, we're at 69.50 right now. If you look to the left of the rest of yesterday and even the marker for the day before, we have not been at this level in the last 2 days. Now, this means two things. One, we're breaking through a new high on the market, or a relative high anyways for this week. And two, we don't have any resistance at this level. And that is exciting information to be able to use when we're seeing large pressure build up. Also, just to respond to a question that had come in, there was a question about when the attack charts go down, that means slower trade volume overall. When the attack charts go up, that means more trade volume overall. And the answer to that is yes. If you look at the I attack right now, a moment ago, when we saw that jump, you notice it moved very quickly and the market rose about 4 points before slowing down again. If you look at the I attack, that reflects exactly that information. We saw a brief jump in the market and there was an increase in how many people were buying versus selling. And then we've seen a little bit of a decrease into a consolidation zone again. And even with the J and the K about to be crossing, we're still somewhat consolidated. We're at a new level. This is something that there hasn't been any activity at, specifically the 69.50 level in the last at least 2 days, if not longer. And the reason that is significant is with the Avenge system, we do our day trading in a matter of minutes. We don't hold our trades. There are very many ways to day trade. And in fact, one of the other common ways of performing day trades is to be using what is referred to as a delayed feed. And most often you'll be looking at a 5-minute delayed feed that you can pay for from the CME. And what that does is your charting will replot every 5 minutes, which is a whole different animal when you're looking at trading. That means that you're taking trades based on long-term trends only. And most often when you trade with a delayed data feed, you're looking at trading for a day or 2 days, or sometimes you'll be holding your trade for maybe even 4 days. And that's certainly one way to be trading. But the way that works is whenever you're at a specific level, you'll wait until you see a trend start to turn around or to push the other direction, and you will enter your trade and hold it for as long as you can. Now, we're at a level where there cannot have been any trades recently, so anything can happen. This can be a level where many people will be placing their trades to be holding for the next couple of days as we're in new ground, and they would expect the market to keep pushing as people get excited whenever we're covering new ground. Or this can give indication that we're going to slow down, and people aren't sure if the market will continue upwards or downwards. And as we've slowed right now, that's essentially what's going on. We're waiting to have a breakthrough. Either we're going to go back down, we're going to play around the 65 level where we had some resistances before, or we're going to push through, and this could jump very, very quickly. Whenever we're in a level of no resistance, that's usually when we see our bigger moves. So going over a couple other questions real quickly here. What exactly do you mean by marker? Yes, I'm just going to be noting on paper a couple of times during the day when I'm looking at something I think is going to happen. I'm not going to be taking the trade, so to speak. I'm just going to be putting in a marker. For example, right now, if I was going to be following the scalp charts upwards, then I would say I'm putting in a marker at 69.50 right there. And then I'm expecting the K attack to cross soon and the J attack, which it just did cross. And from 69.50 short term, it might go up a tick or two. So that's just all I'm meaning when I say marker. I'm just watching the market and saying at this point, I saw this trend come in and I want to see how that plays out. So if I had that marker at 69.50 because the K attack just actually separated green and the J attack just crossed green, then you could have grabbed a couple of ticks off of that. That's a shorter term trend. That's not necessarily something reliable. It doesn't always pay off immediately when you're looking at a trend from the scalps, but that's just what I'm talking about. And one other question, will you be archiving this session so we can review it again later? Yes. If you would like access to this link after the session, please notify one of the Avenge representatives or myself, and we'll make sure that you have the link to this recording. So
Good. It was just this past Friday that we were up near the 1900 level in terms of the actual S&P. And obviously it bounced around there, then fell 15, 20 points, the actual S&P level. Right now the S&P is right around 1874, 1875 area. So again, depending on what Ms. Yellen says, we could be heading back up towards that 1900 as we seen so far here this morning.
That marker I put in at 69.50, just while Greg was talking, it touched the top, and right as it happened, the K attack turned right around, and even the J attack also turned right around. And actually, we have a 6 scalp setup down that would have taken place right at around 69.50, the same place going down. Going upwards, though, that marker I was talking about short term, that would have gone upwards and shown that shorter term trend payoff for about a point if you were taking that trade. Now we're looking at a trend downwards. That J attack cross was pretty strong. The K attack cross was pretty strong, all which took place right at about 69.50. So what I'm doing is I'm writing down the marker at 69.50 going down. And the reason we're following that is we're looking at all 6 scalps being red. Also looking at the K attack and J attack cross. And even now, actually, because of the H attack coming in red very soon and the I attack coming in red very soon, this marker will keep at 69.50 just to see what happens. Again, I'm not taking the trade. I have a simulated ladder open, but I'm not going to be entering the trade. We're just going to be putting a marker there and seeing what happens. So right now, short term, we're seeing a J attack cross again into the green and a K attack cross. And in the line of what we're analyzing right now, it's more looking at a scalping perspective. These are short-term trends that we're following. The 10s have been just a little under 45 degrees for the majority of the session so far. So and the 5s have been conflicted for the majority of the session as well. So we're not really having any reliable information from our larger charts. We're just looking at our shorter term charts at the moment. That I attack, which was about to cross, actually separated and turned green. So that's twice now we've seen a red trend almost come into place and then it turned green. So that's something that's very important in understanding the rest of the direction for a trading session. Now for the rest of the day, if I'm getting ready to enter a trade, I'm going to be thinking twice now. It's been looking like it's going to go red and it turns and goes green at the last minute. Our longer term trends have changed to adjust to the shorter term trends. That was the jump started at about 67.50 and rose to about 72.50, 72.75. So it was about a 5-point jump, and that was because the shorter term charts kicked in and showed replotting angles on the I attack, which is now very strongly separated, the H attack very strongly separated, the B and the C biases, and even the 5s and the 3s are starting to gain some angle going upwards. So again, not exactly a great time to trade, better time to be getting information in the future when we can see all of this build up and then push in one direction. Then that will be the prime time to be looking for a trade. So right now, the perspective we're looking from is a little bit more of a scalping perspective, a little bit of an aggressive perspective, looking at the shorter term trends, trying to ride out the ins and out of a sine wave pattern. And that's kind of the model of the style of information we're looking at the moment. Let's see.
Of course, from our other perspective of even all of the charts, bigger charts working together, did there from that push up through the 72 have the one BC, we also have the H attack, the I attack separate sharply, had a strong A bias as well. Of course, other components 3 and 5 have come in since that push up through that level, and that was a quick turnaround from that 69.50 range up through that level, 6 points on a move up there, which started with just a real sharp K attack in the opposite direction and a thick E, and then continued to move and had those other components come in sharply. They're all still there, but when anything has moved as far as it has, even though we do have that 10 trend line, one would expect if it is going to continue to move up that it would come back at some point in some manner of retracement to those trend lines and bounce off of that. In this last case, that was the real significant bounce spot, and the push that advanced real quick was bouncing off of that trend line and keeping with that 10-minute view of things. Sometimes that's not entirely predictable. You know, at one point it's reasonable and obvious to assume that that the market will break that 10-minute trend line. It could have happened that time. As we had our 5s at the top, they could have turned down. We had the B angling down, even had the indication of an H attack red, even an I attack red, but all that information came in sharply. Interesting whether or not that lined up with something that was spoken by Janet Yellen in the meeting, the financial committee meeting that she's speaking at right now. Oftentimes we will see some sharp indications, moves in the market based upon that. Interesting here, we've had a pullback, and from our perspective, 1B, C, A still there. And let's see, just from our very conservative view of things, where we want to see a scalp pattern in that direction. Interesting, Greg, you and I particularly have been noting the last while on the sessions that some of those less filtered setups, so two-component setups with a pullback and a signal, have been working. We did see a pullback there and then had a white arrow on the 144, but the market has moved down further. In this case, the more filtered thing would have kept us out of that. But if you were looking in those prior less filtered setups with just the two-component 10B, that would have been something to consider, also in light of, or keeping in mind the advance that we had from that 70 level, and just suspecting that there might eventually be a bigger pullback. We've seen that. Volume tick move down. We did see the E and the F go into red. Not a lot of sharpness to that, but as it coursed its way down, we saw flattening in the C, flattening in the B. Still have a strong 10A, and so let's observe if these smaller charts do begin to turn here at this potential bounce spot of 73, not near the 10-minute, 5-minute, or 3-minute channel line at the moment. That's closer to 71, even 72. And we're actually near 72 right now. 71.50 there looks to be a bounce spot. Go ahead.
So here is where we're going to do some theorizing. And Darren, Greg, and I all have a lot of experience watching the charts, understanding various nuances of information from them. And so at this point, we're just going to talk about what we think the market's going to do. And we're going to talk about our reasons for why we think that. Right now, we've seen arguably either a pullback or a bounce spot on the top of the market. And actually, just doing a little bit of research while Darren was talking, Janet Yellen and her announcement actually is already underway. And 7 minutes ago, the announcement showed that there were some rates and growing risks to economy developing, but she hinted that those may not be as serious as previously mentioned, and that was where we saw that rise up on the market. So just an example of how on a fetish day there actually is news that's real time that's taking place that is affecting the market. So then right now we have an eye attack cross red coming in. Our 3 column is showing some pressure downward. Our H attack is about to cross red again. Now let's revisit this. Twice so far today, we've seen a red H attack almost happen, and then it separates and goes green. So normally, just seeing that without any other information on the day, I would think, okay, the H attack is about to cross red. This could even be a good trade going red because we've already had an I attack cross. With 2 attack crosses, we often see the pressure double, and doubled pressure is always good. But for what I see right here, I think that our scalps are showing short term. We will be moving upwards in the near future. Actually, I'm going to say that short term we will be moving upwards. Our scalps are going to probably consolidate here, maybe push a little bit further, but I think ultimately we're bouncing and we're going to push up a little bit further. Long term, I think that based on our G attack finally starting to come together a little bit closer and how our 10s have not gained angle beyond the 45-degree threshold, and even the A bias is well, it's a little bit tricky to say right now. We're consolidated where we're at. In the last 4 minutes, we've been consolidated in about a 2-point range, 3-point range. And my projection is that I think that actually that H attack just did cross. So the first 2 times we saw that H attack about to cross and it didn't, it turned green. that was indication that the market wanted to go up. Now the H attack did actually complete its cross, and now we're starting to push our way down just a little bit. So I think the market will be consolidating in this range for a little bit. We're going to see the ones turn green in a moment. We're going to see a J attack happen in the next few moments, and it's going to push up a little bit further. And then based on the developing information from the G attack, I think in the next 15 minutes or so, we're going to start to see the market push down.
On a side note, just watching the live feed, Honorable Yellen, I've been addressing her as Janet. I probably should correctly address her as Honorable Yellen. Ms. Waters was asking a question, and she was obviously a Broncos fan, wearing her orange outfit and her blue fingernails. It's a shot of her now again. Those of you who are watching, I'm watching this on Fox News, their business feed. Anyway, just a lighter side to our commentary today.
I wonder if anyone's made comment.
We did push down through that consolidation zone, as Brandon was suggesting, with that H attack. The H attack has backed off. Nice 3 ergs have come in. 531 volume even tick down.
Here is the key point as we hit the 10 and the 5-minute and 3-minute trend line. Will there be a hard bounce off of this? We still have very thick B bias and C bias. 1 minutes eventually will finish their cycle. Could line up with the volumes and the ticks turning at the moment. E, D, even F are in the red deeply. We've had the I attack that's taken over in its cross after the H attack is dissipated. So here's the challenge part right here. If this market is going to move through this trend line, we will see definitive turns. We see the 10 minutes already starting to soften. But we've also seen situations where there's been hard bounces off of these bigger trend lines, despite what the information appears to be showing in the other charts. And that's why it is one of those scenarios where you want to be, when you're up against those significant trend lines, taking trades at that point. Well, you really want to be certain of the information that you're seeing. Here we are moving through the 3, touching on the 5-minute trend line and the 10-minute right now. Still have our ones and volumes, or at least the ones, starting to come near the end of their cycle. This 67.50 is a horizontal point of resistance, which looks like it's lining up with the 10 and the 5 trend line. One of the 10s going red. 5s are now sharper downward. And let's see if this can develop further through that 67.50 level or bounce off. If it does move through, certainly looks like it is going to. Looks like we will be looking for, at least you'd want to see some manner of pullback to be able to see with a scalp overlap something in that direction. 5, 3, C, even the B, though it is sharply thickly in the green. You see that H attack now separating as well. Recenter that ladder. So it did move through that 67.50s, pulled right back up into it. Sometimes those major trend lines you can move through, and there can be what would be called an overextension, and the market whips back into that trend line. Ultimately, what you end up having on the next plotting is at one point you see the trend line replot with that new point. Trend lines always plot between 2 points. You've got two points of retracement, if you want to call it that. It's probably the easiest way to say 2 points of retracement. And then you have those 2 data points, those 2 fixed points to plot that blue trend line on. But if there is an overextension, then there is a new line, a new point which the trend line can plot against. So you will oftentimes see a a replotting of that trend line to accommodate that new data point. So at some point we might see that happen if the market does continue to move up, bouncing off this spot. We will at some point see in the 10, 5, maybe even in the 3, a replotting of that blue trend line to accommodate this level and the 55 level as well. So
very quickly, we have our first G attack cross of the day. The G attack crosses very rarely, but when it does, we often see powerful moves. Now, again, please know that the information we're talking about today is, again, theorizing, and we're not sure how exactly this market will play out, as it's a fetish day. If you are trading today, then just know that we're talking about everything and with varying amounts of certainty on the market. Now, also, I want to say that I was wrong about my prediction a moment ago. I predicted that it was going to travel up a little bit and then drop, and it just dropped right away. And now we're starting to see a little bit of that bounce come in, where we were talking about, or I was mentioning that I thought the J attack was going to cross and the scalps were going to cycle upwards. And even with the scalps cycling upwards, the market does not want to go up very much, which means the red pressure we have is strong indeed. And you can even see the 5s, the 3s, really strong angles, B and the C, and here it goes. That's the G attack cross we just saw, and this is just pushing straight through. So H attack, red line still very much on top of the green one. I attack there.
out of interest from visual tracking, the ladder being in demo just didn't populate quick enough to be able to get in. I was jumping in at the 67.25 level just as things started to build pressure downward. Saw the 10 minutes turning, saw all the angles in the A, B, and C come down 5-3. Now there still may be some retracement here with the smaller charts turning, but overall if those bigger perspectives do continue, we have moved through the 10-minute trend line, stayed there, didn't have the bounce back. But on these kind of scenarios, you're going to have to just naturally accommodate a larger stop, as there may be, and certainly in the times that we've seen recently, even some of the bounces that we would have expected are far greater than what they were in times past. But accommodating that with a deeper target can produce, with a bigger view of things, as you weight out the smaller charts, can produce something that moves down quite substantially. As I say, Brendan, I tried to get the 67. Of course, we're not looking even at signals in that scenario. That was without a signal. But my ladder didn't populate the 67. I just got in, as you can see, a point and a half later, but just wanted to visualize what you were talking about there. And as it pulls back, once smaller charts begin to turn down, and assuming we still have that nicely observable red information in the bigger charts, 5-3, B, C, K, L attack cross, as you say, the G coming in now, angled down in the A, 10's turning, we can oftentimes look to improve your break-even position by appropriately selecting a point at which to double your position. That's a little bit more of an advanced strategy, and it's not errant or flippant. There is reasons behind it, and
here we've hit our edge of the pullback. It looks like that J attack cross green. It's definitely there. Our green scalp charts are all starting to turn at the top of their range. So this is an expected pullback. When the market gets ready to make a large movement, it will be full of pullbacks and sometimes larger pullbacks as well. And here the J attack is crossed a little bit sharper, pushing up further. We're probably going to go, I'm going to guess, maybe around, if that's not the bounce, then it might hit up back around 1870. And then we still have a lot of good pressure from the rest of our charting. That G attack crossing, once that's concretely crossed into the red, I think that this is probably definitely going to go down further. But
and that's assuming we don't have any sudden information from the hearing that's going on that will
Yes,
change that. But
exactly.
you see the ticks starting to turn here. And again, just in this view of things, it's not unreasonable to expect from a move down 78 down to essentially the 65, 13-point move. That's where we started to see all of those information pieces come together, that G attack. Not unexpected to see a larger pullback. As you say, the 70-50 is a potential bounce spot. 1 minute's turning as they are. Interesting to see the D bias stay in the red and begin to angle down. So if there's a sharper turn in our volumes and our ticks, 1050, we just had a replot in the 5s and the 10s. Lost a bit of one of the 5 minutes, but they are still angled down. 10 minutes gave a little bit more angle. That B bias certainly came in sharper, closer toward the red. And volume tick. This is our decision point right here. If it breaks down below this level.
We just had a replot of the G attack. Notice the lines are on top of each other. Again, we talked about this earlier. This happened with the H attack. Two sources of information we get from this. One, the cross happened and it was weak. Two, there's chaos in the market and very likely short-term there's some green pressure, which we of course know there is. Now, keep your eyes on that G attack. If it shows the red line gain victory, so to speak, over the green line, then we could very likely continue pushing down. Our scalp charts will turn and everything will start to cascade towards the bottom of our range for the day. If that G attack shows the red line stay down and the green line gets victory, then we could be bouncing here and starting to push up again.
So here's our volume tick F going into red. See if the E does it as well.
There's that K cross too.
Jump in.
Just turned red.
You might see the J also follow suit here with a red attack cross. If we do continue to press down, you can see we've now closed the gap, coming back to within a point of that break even. There was a thought process to double up at that level as the volumes and ticks were turning. Didn't see at the time the F and the E were still very thickly in green. Of course, now it looks a lot better. But of course, that's one of those decision points that you make at the time of. That may or may not have been a good point to double up. Oftentimes, these kind of retracements are in stair-step patterns, and more often than not, there's, at least I've seen, 2 to 3 stair steps before there's the bigger move back down, in this case in the downward direction. We've had one stair step up to the 69.50 or 69.25, and now sort of approaching that as well again. So this may be the second stair step. If it breaks above that 69.25, then there is further reanalysis to go. If it doesn't, then that suggests that we would have started a stair step pattern downward, each with a lower low and a lower high each time. So if it doesn't go any higher than this, then our 68, if that is this turnaround spot, is a lower high than the 69.25.
Real quick, that top 5 is losing angle. I don't like that. I was thinking this was going to go down. I'm starting to think the other way. If the top 5 is weakening just a little bit, that's just one tiny source of information from all the other red information we see on the left side of the 6 charts. Still good reason to be careful about this. Here we go. This is kicking in. There was a really good K attack cross a second ago. And
keep in mind the cascade effect here. We've talked about that before, but in terms of a short-term view, what's happening on the volume tick in the 1 minutes is the more immediate short-term impact. And yes, the 5 minutes are flattening, but if there's a strong move down here with these smaller charts, and if these ones turn down, E, F, now into the red,
here we go.
Then
this is perfect.
See that 5 straighten out.
Those ones are at the top of their range still, and we're still
so you now
about
might want to lock in a point, and you can take 2 points. Well, it's even dropped down further there. Interesting. So, there's a lot of stuff going on here.
This is a large trade. Now, keep in mind that when you're looking at something like the G attack, which we saw cross about 5 minutes ago, the G attack is on our 10-minute trend line. or our 10-minute
Brandon, now your
trend
5
follow.
minute has come back in again.
Yep, 5 minutes
You
getting a
can
little more
just, if you
angle.
want to just play with this, you can just even, well, it took me out at one point there. But that was very quickly an opportunity. Thought about locking in the 2 points when it passed the 63.50 level. In fact,
I
it
think
actually touched on 62.50, but that was one of those, that was in that real sharp drop and bounce up again, so that wasn't even, unless you targeted that level. Go ahead.
I think that we just saw the geotack cross, and I think we're still certainly going down long term for the day. Short term, we definitely have that pullback that's coming in, which we're watching. We haven't had the JTAC cross just yet, and we still have the ones at the top of their range, which is actually really good if you're trying to take a trend downwards, because we're having the pullback, and we're about to have another, little burst of information, if you will. And on the ones, once they turn red, and on the J, once that kicks in, then this could keep pushing. So I have a marker set in back at 66.25. Darren was talking about the potential for a pullback. And actually, I'm just going to note that right now we're at the 5 ergs. That top 5 still is churning, and it's almost flat even now. That J attack just crossed, and we're seeing the red push again. And here it goes.
So you see, I just jumped back in again at that trend line. 317 trend line was a potential bounce spot if there was still downward pressure. So I just took that without seeing any indication of a pullback. Without any indication of an arrow. Locked in 2 points now. And
wow,
locked in 3 points. And I'm happy with the 3 points if it takes me out. So that's 4 points on the day, but that's playing things just a little bit more aggressively, taking view with a bigger stop, and also looking at just managing those bigger retracements, and just keeping an overall bigger picture on things, though. And just recognizing that there can be a lot of broad swaths in this 317, particularly trend line downward. And it's possible to consider the same thing again here. The ones are starting to turn. Still have the 3, 10s, 5s, A, B, C. And we have had a pullback right to that 317 trend line. As I say, oftentimes we have 2 to 3 bigger stair steps. We've had 3 downwards now, so there's possibility that this may be a retracement upward that reaches that 317 trend line. You can see we had 1 stair step at 68, 1 stair step at 65, and now 1 stair step at 62. So there is that breakthrough, which doesn't mean that it's not going to continue to go down, but these 3s turning could be what's giving it the impact upward through that trend line level.
Well, I'm having a little bit of an issue with my ladder, but I was going to take that out at when we saw that 5 start weakening. We still probably do have a pretty good trend pushing down, but because the 3s are at the bottom of their range and the C is starting to show some weakening, and even if you look at the eye attack, the green line's at the bottom showing that we're not having a lot of buyers, but it's also slowing its descent, and the eye attack is starting to come down as well. And that could show in the near future an eye attack cross green, and whenever that takes place, then most likely we're going to either consolidate or push up a little bit. So this is the point where I had my entry in at 66.25, and I want to probably get out of this and look for better information before I'm letting myself stay in on the market. And of course, this is just all demo and theoretical, but still for the purpose of tracking and tracking well. Question came in, can you explain the trend lines? Is it the red dotted or blue straight? Do you follow it all the way up or where the last red dot stops? Good question. The trend lines are both the red dotted line and the blue line. The blue line shows the top of the range of the trend, red line shows the bottom of the range of the trend. And do you follow it all the way up or where the last red dot stops? You follow it to where you see a new replot. So you'll notice that if you're looking at the 317 tick chart right now, we had a very larger trend downward You'll notice the red line and the blue line followed each other for a certain number of ticks until they got to the bottom at 59.50, which is where the bottom of that red line is. And then there was a turnaround. It went from 59.50 and the red line turned to the blue line, and the blue line went until about the 62 level, 1862, if you can see where that blue line ends. And then there was another replot where it pushed down just a bit. So the trend lines we have show the general trend in the candlestick plotting of our charting. And we don't necessarily use those for our trades. Those are kind of just there as markers to show us what direction the candlesticks are plotting. Also, just want to comment that G attack has lost its angle and its strength. So one of two things is going to happen here. We're going to consolidate and we're going to go up, or we're going to consolidate for a while and then our threes are going to go back through their cycle and then turn red at some point. And either way, I think we're probably slowing down for the moment. In fact, you can see even on our I attack and our K or H attack, we're showing we had a lot of volume a moment ago, and we're starting to slow down in volume. So this is a moment when we step back and look at the market and talk about what we think is going to happen.
So the interesting, I did mention about the 2 or 3 stair step or stairs in a stair step pattern, upward or downward. We're coming into this position of trying to test that 63.75 here. See indications of the 1 minutes turning up midstream volumes ticks. If we do breach through that, which it looks like we are, that's our stair-step pattern developing upward, coming against the 5s and 3s and even the 10. And see whether or not there's enough to move through that with the 3s turning. If there's a sharp I attack and a sharp incline in the angle of the C bias that does follow and sort of underpin some of the smaller moves, then that could be very interesting. We see we've had the 2 stair steps upward. That could also be the extent of that pullback in relation to a bigger move continuing down with those 10s, those 5s, that A, that B. That would be my view of things here, that it would go down. Bouncing off that 5, 3, 10-minute trend line. In fact, if we do see this move through, and just out of interest again, I should have, when I talked about it there at the 62 level, I should have put in an order there, but just was busy talking about it there. But just seeing the potential break here, needs to move through the 59.50. That is the key. Those 3 minutes tried to turn, C bias angle down again, and we'll ultimately see what happens. But again, 62, where I started talking about that, should have been where I would have done that, and it was on a bit of a feel perspective, just seeing that bounce off of that 64.50 level and come down again to attack that 61.50 level.
We're seeing that I attack come back. That green line, it went and touched the bottom and it's starting to climb. We're starting to see a lot more traders on the market start buying. And actually, we just saw a replot. It's even stronger
the 3s and both became green. So now this is, as long as the 10s and 5s are still in the direction that they are, this will ultimately move down, but there may be more of a move up with those 3 minutes, and the more that they do that, the more likely or possible the 5s will change over the course of time, and the 10s. But there's always that possibility with a strong turn in the 1s, that it will bank right down again. As Brandon mentioned, this is a broader sort of consolidation perspective we're in now, even bracketing this 59.50 to the 64.50 level. And so really, at this point, it can go up or down. It's going to either breach the 59 or it's going to breach the 64.50. Looks like with this attack right now, with the ticks turning, the 1s going up and those 3 minutes gaining some pressure, the immediate possibility is that it will move up. And if you wanted to look at this in a more particular perspective, you would have your stop above that. Again, this is more of a, more of an aggressive kind of view. And again, I would have looked to have been in around the 62 level and probably locked in a point as it breached and came down toward that 59 level.
Now I'm going to put a marker in right here. I'm going to give it a sec for the market to relax a moment. I'll put it in here right at 62.50. The H attack is starting to develop. The I attack is already closed a lot of the distance between the two lines. And the threes are turning. The fives, that top five is taking a very long time to show any strength. That B just went flat. And actually at the replot just now at the 11:05 mark, the B just gained some angled red. But, excuse me, the fives look like they're just about getting towards the bottom of their range. And because the threes have already turned, again, that marker was at 62.50. I'm writing that down right now. And the information I'm following is 62.50 going up. I'm following that I attack. Actually, it's gotten even closer. I like that. The H attack, which is coming in soon. Maybe in the next minute or two, but that's okay because we're following short term, another attack that should be crossing pretty quickly here. Any other information I'm following? Not really. The fives don't have any good information.
Volume is spiking, and of course it still hasn't moved through the 64.50 level yet. Those threes are becoming stronger. There is definitely the possibility of that attacking the 64.50. If we do see these 1 minutes turn though, Brandon, that may be the impetus back down in this range again. We've certainly seen a lot of broad movement in bigger ranges in recent times, ones that have caused us to think it's going to break one way or the other, and it ends up breaking the other way than what we actually imagined. Interesting on that 11:06 replot, nicer 3 minutes. Your I attack backed off. The C bias came in sharply downward. Ones may start to turn down, and the 10-minute perspective overall may be what moves this in a downward direction, overlapped with the smaller charts. But at the moment, still in this range, bouncing off both the top and the bottom here. Now attacking the bottom again. And if it can move through this level, well, again, in my mind, this could go either one way or the other. Depends on where the momentum kicks in here. Momentum, in the immediate sense, could be defined around what the predominant move is in the smaller charts and the biases.
So what I'm doing right now is, again, the marker is at 62.50 going up, and of course, we're not in the profit at the moment. I'm looking more at a long-term perspective, entering a trade and holding it for maybe 20 minutes or so, instead of going for a shorter term, just grabbing whatever profit you can. So before I was talking from the perspective of scalping, now I'm talking about the perspective of slower, longer term, sort of aggressive analysis of the market. And that I attack did certainly back off. H attack is backed off too. It's still closing. The I attack still getting closer. Those threes are holding angle and still certainly angled upwards. But what this means is most likely that trend is not going to kick in just yet. So probably going to have to wait a little bit longer. Again, this is all experimental. Putting in that marker at 62.50 has shown that the market wanted to push down a bit further. And so it looks like Darren was correct in his analysis that the fives are pretty strong. And here we go. We're breaking through the bottom, and it looks like we're going to push through. That G attack even regained its angle to show that we've got some good red pressure.
Yeah. Locked in a couple of ticks here. I'll just leave it as even a 4-point target and just leave it at that. Lock in a point now.
Wow, look at this, still going.
And I'll just take 2 points here. So just grab 2 points there. But there, the key thing out of that is that in both scenarios, yeah, and it, well, you know what? It's very rare to get a perfect, scenario where you get the top and the bottom of something. If you just get something in the middle, in the sweet spot. But the point to be made there, Brandon, and I know you'll agree with this, is that I don't see either of us being right or wrong. I think both of us are right. It's just what is the time frame in which we are both correct. And I think ultimately, as you say, we will be moving up. Now I think once the 5 minutes start to turn, it looked like as the 3 minutes were turning, we would see it at that point, and certainly did press to that 64.50 level, indicating that that could happen. But that was just an extended pullback in that range, and we did drop down further. We have another point of resistance in around that 55 level, and that is in fact the low of the day, which could be that bounce spot. But in the course of that drop, a lot of the information that you were looking at did change, and that also could have been spurred on by something that was spoken at that hearing as well. So this is kind of one of those odd days where that kind of impact does impact on the developing trends, but totally, well, I completely agree with your analysis. Just so happened that looking at the 10s and the 5s and waiting for those smaller charts to come in downward with their pressure was the way I was looking at it, and you were seeing the eventual turn of the 5 minutes with that approaching H attack. Of course, we see that's backed off a bit, but we see the I attack starting to come back into a green cross, and this could be the place at which what you were envisioning does come about. You had your 62.50 marker. Depending on the kind of stop that you had, you either would be stopped out or looking for an opportune point at which to double up.
Yep. So also to note, if you are, some of our traders are setup 10 traders, or just the 10 traders, they follow the direction of the 10s for the market. If you were that kind of trader, then those 10s turned red probably around 72-ish when we were first talking about seeing that G attack start to come into crossing. And I mean, just because we're covering everything that's possible today, if you were just trading on the 10s and or maybe on the 10 and the G attack, or just the 10 and the A, you could have entered at 72 and held it all the way down to where we're at right now, and just trusted in that long-term trend of going down. So I'm hoping, we're hoping that today is revealing lots of information to you, our clients, everybody listening today, and that this is something that can help either A, inspire to try another style of trading, maybe take a few days in demo and see if there's something that might be revealing more profit for you. Or if you already are pretty consistent in your ways, then maybe this is something that will strengthen your confidence in what you do, or maybe you'll add to it a little bit. Maybe you're a scalper, but maybe now you want to only scalp when you see the attack charts cross, or whatever the case may be. In terms of looking at trends and how they work, Darren was completely right. There is no perfect way to analyze the charts, and the trends we see do come in different time intervals. Note that that I attack, when it was just about to cross into the green, usually it'll cross into the green. Most days, that's something that's pretty consistent. You'll see it about to cross, it'll cross, market will move. Today, I'm going to chalk that up to probably another Yellen or something in terms of our economy interrupting and causing the market to turn around short term. Now we're starting to see that green trend come in. That I attack is very near to crossing. Threes are just probably about a third into their cycle, which is when they're just about the strongest. C bias is, well, weak, I would say. That's not a very good C bias. If that was a presidential candidate, I would not be voting for that president.
We know you're voting Trump, so just don't hide it anymore. Don't hide it anymore.
We never said we were going to bring politics into this.
I always thought you were a carpenter.
Confirming or denying that, by the way.
I always thought you were a carpenter and liked to sand things down.
I didn't understand that either, don't worry.
Sanders.
I wondered if you were talking about Sanders. Okay.
Like to take the rough edges off of things.
Wow, I haven't heard that analogy, and I hope we haven't offended half the people listening.
Neither have I, so don't worry.
They both did quite well last night, so their own platforms. Anyway, We are in a shorter term consolidation. The volumes and ticks are in the process of turning, but the ticks are weakening, so is the volume. Still have those strong threes you were talking about, Brandon.
Here we
Yeah.
have our eye attack here,
Yeah, there's
green.
that cross. Look to
Let's
go.
see what happens. 3C. So just out of interest, I'm going to take that indication right there at the 61.25 level where we see that attack coming in. 15 seconds, we'll see whether or not it plots in a continuation fashion or not. What I do like is that we do have an upward trend being developed. We had a high of bouncing off the 69 or 59.50 level trend line, came down, higher high, a higher low, sorry, and then a higher high. We've had a two stair-step upward there pattern, and so my thought is that we'll continue increasing here as the threes are coming up, fives are turning. B, not so much helping us in that regard. Tens are still down, so that could be an overriding force downward.
We actually have a
See the
perfect
ones and the
moment of
volumes.
conflict here. 10 AB down, 5 3 C, I and H sort of showing green pressure. So we kind of have a good number of charts for both directions. So
See,
now
it
it's
very
a
quickly
tricky
went
spot to
flat
trade.
with the volume DEF tick down
Yeah.
coming out of the shorter term consolidation.
Yeah,
See
there
if
is a 59 or 58.50, 59.50 level. Sorry, the 58.50 level is a potential bounce spot. Also the 57.50 and of course the 56.75. As the C begins to weaken, as you say, I would like to hold out and see what happens as these ticks and volumes turn. See the K and perhaps the L even attacking toward the green side. These are those scenarios where, you know, the fear is that it is moving against you, and so you simply just get out. But looking at some of those other pieces of information that may come in to assist you, and then just overall the angle of the 3 minutes, the turning of the fives, all possibilities.
and just keeping in mind this is a more advanced type of strategy compared to the typical strategies we do employ. Normally going for shorter term gains.
That I just
Comment
crossed the
here.
line.
You're right, it did. It changed around. So this is one of those things where if you want to take a different perspective, I just want to track this with the eye crossing red here. This is not something that I would normally do, is just reverse my position here, but just wanting to see how this would have played out. What I was going to suggest was there was a couple of potential bounce spots, and having your stop just below one of those significant ones might have been a good thing. I did have it below the 56.75, but just as that eye attack green came in, I just wanted to visually track that.
Yeah, and that I attack uncrossed
Purposes
now.
of this discussion.
This is typical of a Fed-ish day. We're seeing predictable moves, and they're having unpredictable pullbacks. And generally, I think that we are probably going to consolidate here for a little bit further, and then it's possible those tens are just going to have a stronger set of indications than the rest of our charting altogether. But I'm thinking that long term, we're probably towards the end of the range of those tens. When you look at the range on a chart, if you look at the 10 ERG chart right now, the bottom of those red lines on the farthest right end of the chart, they're at, if you look near where the most recent low on that chart was, following the sine wave pattern, that showed that was at the bottom of where it turned last. And that was where it turned green to start heading upward. If you look at where it is now, it's right at about that range. So you could expect that this is going to sort of slow down and start to turn green just because of the range of where it's at. That's one other smaller piece of information that we can kind of ascertain from the ergodic chart. We can kind of gauge where the range on that chart usually is when it turns. And even if you look at the 5 erg chart right now, last time the 5 ergs had a full red cycle and then started to turn green, they went all the way to the bottom of the chart. And you can see that on the bottom left corner of the 5 erg chart. And now the 5s are at the bottom of that chart and they're starting to turn green again. So most likely the 5s are rounding out the bottom of their cycle and they're about to head upwards. Also, wanted to cover real fast. We've talked a couple times about doubling up and what that means. So if I had held my marker at 62.50 from like 20 minutes ago, if I were in that trade, and let's say I did something very foolish and I pulled my stop all the way back by like 7 points, and I was willing to risk that much money on this trade just because I really had faith in that 62.50 going up, which now if I wanted to, I could take a couple ticks on it, or maybe more as this keeps going. When you're in at 62.50 going up, and the market goes all the way down to 56.75. And let's say you were the brazen, bold trader who held that trade all the way because you had faith in that trade. Then at 60, let's say it went all the way down to 57. At 57, if you purchase a second contract going upwards, you'll now have two entries, one at 62.50, one at 57. Because you have two entries, the market will automatically adjust your break-even level to be an average of those two numbers. So instead of needing the market to go all the way back up to 62.50 to get any profit, or even just to get out at zero, then all of a sudden it'll average between 62.50 and 57. So maybe your new break-even would be 59.75. And that's way easier to come back up and to cross that and to be able to get profit. And then, of course, you're increasing the amount of risk that you're putting behind that trade because you're increasing the number of contracts you have behind it. But the point is, if you're in a bad trade and you're really confident in the trend kicking in as this now is, then you could have doubled up. And instead of just having a little bit of profit here, just going over the 62.50 level, your break even would be back at 59.75, and you'd be looking at about 3.5 points of profit right now. So that's what we're talking about when we talk about doubling up. It's definitely a more aggressive strategy, and it also involves risk, and you really should practice it a lot in demo before you ever try something like that in live. But that's a strategy that we use to adjust our break evens, so to speak. Also want to go over a couple questions that we have that came in. A question about the attacks. It was actually a question that was maybe about 15 minutes ago. If we have a 10.5B but going down, but almost all the attacks are turning positive, because the 10.5B info is older, do you think that the attack is more pertinent? My answer is yes and no. And I say that because the attacks, as we've seen a couple times today, whenever the market's a little volatile, they're wishy-washy. You see the cross about to happen, and then it doesn't. It backs up. And that's exactly what we've seen today. Today, it's understandable. It's a fetish day, and we're probably going to see the attacks do that a bunch more. Even right now with that eye attack, it's starting to come close together. It wouldn't surprise me if out of nowhere it bounces the wrong direction, and the green line gains a whole bunch of angle, and we just head straight up. Actually, with the H attack about to cross, that's what I would expect anyways. But I was talking about the attacks being more pertinent. So I would say yes, they're more recent information because they're showing short-term what the market's looking like for buyers versus sellers. But I would say no because the ergs and, well, specifically the ergodic charts are stronger than the attack charts and the bias charts. The ergodic charts are really the heart of the software. They show the trends and interpret the direction of the market over a long-term basis. The attacks will show us volume and strength of buyers versus sellers, relatively anyways, similar to what the bias charts show us as well. Going on to another question. We have a comment here pointing out that we had a lot of buying in the 1850, 1870 range back in August of 2015. Okay, so that's actually really important information for us, meaning I was talking a little bit earlier about how some people will take a trade and hold it for days. Sometimes people hold it for much longer than days. And if we had a lot of buying at this level back in August, then these people could be either removing their trades or entering in further to be trying to ride the market as it goes up. So we can be expecting a lot of activity right around this level. Good to know. Thank you for that comment. Question, how do you mark the colors on your ladder? I use the same Transact ladder, but I do not see an option to color code my high and low points, my bracket, and my entry bid. Call your broker. Sometimes someone with tech support will be able to fiddle with the settings and adjust it in a matter of a couple of seconds. That's just
Sorry, Brandon, that was answered privately there. There is properties on your ladder that you can adjust those colors on.
Okay. Explain reverses, please. A
I can do
reverse.
that if you want.
Sure. Go ahead.
Basically, reverses, you certainly don't want it to be your regular course of getting out of a trade. Basically, if you're in one direction and then you suddenly feel that the market is moving in another direction, then you can immediately reverse. Sorry, I just was
managing that trade at the same time.
Basically, if you're in an upwards direction, well, what happened there in this scenario was I was originally in a trade upward, and then Brandon was just identifying that I attack red downward at the time, and I came close to that 57.50 level. And by the reverse, basically what happened was the ladder just inputted an opposite trade to not only close out your position, so it put in a sell order to close out my buy order, but also put in another sell order to put me into a position downward, a sell or a short position. And so you've reversed the direction that you were trading. The reason to do that, well, it's certainly a quicker action than populating a sell order and then putting in another sell order. It effectively takes place at the same level, whereas if it's something that's moving in quick fashion, you may or may not be able to get out at the level that you want and get in at the level that you want going downward in that scenario. So it is useful in that regard. The challenge with reversing is that if you've committed your mind to a particular strategy, in the case upward, and I'll just use that last example or last scenario as an example, I was committed upward. It had moved down, hadn't breached the 56.75 point of strong resistance or support in terms of my direction. And so my view of things was still the same. Unless it breached that 56.75 downward, then it would have changed. I shouldn't have got into the concept of reversing, and in fact, as I say, I wanted to do it just to give a visual of what Brandon was talking about with that red eye attack. But that is almost an emotional reaction to a move in the market. If your scenario, your view, your strategy is still relevant, and you're still within your stop loss acceptable loss amount, then you continue to hold that and not worry that it's pulling back against you. That's a scenario where you consider the double up in the upward direction to improve your break even, as Brandon discussed there as well. But you can see if I had have done that, or if I had have even just left it, as long as it didn't move through the 56.75 level, as long as it didn't break that. In fact, it did bounce off the 57, came right back up. My original entry, which was in and around the, I think it was the 60 level, certainly would have advanced there quite far. What I did do as it came back up to that 61.25 level is that I reversed there again, just because it looked like it was going to break through that top. There's a lot of mounting pressure. We had the E and the F bias, despite the red volume and tick at the time, still pressing upward. Ones at the time angling upward, and the threes starting to become real sharp again. That was something just to, continue the prior upward view that I had, and it did eventually move through. Tested that 64 level for a bit. What I also ended up doing was, and we've done it before, haven't done it recently, just put a compound trade in there at 64.25, which was one tick above that.
Sorry, real fast.
Level of 64. Go ahead.
And I just crossed at the exact same time, double red cross. Just pointing that out real fast.
All right, let's take a look at that. I'll just throw in an order, and
Ooh.
I just missed it. Just missed it. Well, let's see if it'll pop back up again and put in one of these orders. But just as I clicked on it, it was missed and gone. These are one of the things where you don't necessarily want to chase, but there's where I could have gotten it, 60.50, just as you mentioned it. Tried to get the 60.75, which was the open spot, but as soon as I clicked on it, it was at 60.50, and then it dropped. But the scenario, and I'll just to see ourselves track this down here, I'm just going to throw it in there where it is right now, but keep in mind it's about a point later than what was available at the time. that Brandon interrupted. But just going back to that compound, I put another order a tick above that break point, such that if it broke that, the scenario would be, or the thought would be, that it would continue to break above that for a couple of points at least. That added another contract, improved, or I guess weakened my break even in the sense that I wasn't in any longer at the 61.25, but it was more like 62.25. But it was able to move forward, and I was able to get out ultimately for about 4 points net on that top side there as it touched that 66. In fact, I think I got out around 60, 64 or so, so it did go another couple of points.
Note that the 10s are still red and still
overall
decently strong.
And actually, I should point out, just to jump in, Brandon, the trend line on the 10 minutes, that now has plotted with that last push to 66. We've got a replot of that trend line, that blue trend line. You can see that's been replotted now. It used to be at a steeper angle, and now with that new data point, we've got a new plotting and a new trend. So overall, one could say we broke that trend upward, but with the movement back down again, what we've done is reestablish or redefine that trend given that new data point. And as you say, the 10 minutes are still angled down sharply with that A going into red, which could be significant, B continuing to move below that 25% line.
So this is a good example of, we were talking about about the 7:30, 7:45 mark, about what we were thinking was going to happen. Darren was saying it was going to go down. I was saying it was going to go up. It went down, and then it went up. And ultimately, what we saw there was a mixture of the 10-minute trend, which is staying faithfully down, actually maybe losing a tiny bit of angle now that it's replotted a minute ago. But generally, what we saw from that green push was the 5s and the 3s. And they didn't affect the trend that the 10s are following. So so in the 5 and 3 minute intervals into the future, we saw that the market pushed green, and then as it's starting to turn around now, and we've seen the H and the I cross and push down. The 10s have held, and the 3s are starting to turn around at the bottom. Actually, they're starting to change again. The 3s are kind of going flat, and that C is starting to angle up as well. We have a lot of conflicting information right now.
And this is one of those scenarios, if you've committed yourself to a particular view of things, if it is the 10-minute, still have sharply angled 10 minutes, though as you say, that 1 is flattened a bit, but the A, the B are still there. 3s could turn into this in a period of time. Volumes and ticks, that's what's pushed us upward here now, but those could turn around again. And so the real challenge is not to get swayed by what you see in the smaller charts if your perspective is in the bigger view of things. As long as that continues to be accurate and the setup continues to remain, you're going to have to manage a bigger stop. There's no doubt about that, versus a particular strategy that involves the scalp charts, say, for example. But if you're okay with managing that and waiting out the cycles, in this case probably in the volumes and the ticks, if the 1s turn into this upward and those biases begin to climb into the green, then you could have to wait out and manage a 1-minute cycle as well. The fact that the 3 minutes have both turned red and the C bias is down, slight though observably red eye attack separation, this may be that turnaround spot here. But if we break the 58.75, it'll go down to 56.75 and perhaps test that. And so if that is your strategy, then you maintain that until it no longer is applicable, or whatever defined stop loss that you've set has been hit. Interesting that the 5s are starting to show angle, but no real angle change in any of the biases adjacent to that, or that, at the moment anyway, H attack.
Note that the 10s look like they're still nearing the end of their range. They've pushed beyond the last time that the 10s bounced at the bottom of their red range. That G attack is still slowly closing in. The G attack is it's the slowest of all of the attack charts to show a cross, and usually there aren't very many crosses in the course of the day. But in fact, today we've only had one so far. But we'll keep an eye on that and try and figure out more after we've broken out of this consolidation. We're definitely consolidated in this 2-point range or so. Well, we've broken out of consolidation. We just pushed through, and that's an I red cross and a red H cross that we've been tracking for a little bit now. Looks like those finally kicked in. And even a red K cross on the shorter term charts. So also, I just wanted to say real fast that we're going to be stopping our theorizing and our information overload at 8:45, and then from there on, we'll be taking specific questions. If you want to ask a little bit more about your trading, or if you want to ask about this chart or that chart, whatever it may be, we'll be taking specific questions at that point onward. So we have about 10 minutes left, so we're just going to keep talking about the charts and what we think is going to happen.
So I just locked in and took a point there. What I was trying to envision, now see the 3 minutes turning a little bit more, that may change things, but I wanted to see that break the 56.75. I was planning to have a double up, a compound at the 2-point advance level there, but it didn't move through it. It would have been at the 57.50 level. It came within a tick of touching that. Again, that's a more advanced strategy with that compounding thing, but with those 10 minutes advancing, we just lost that B bias, interestingly, Brandon, at the 11:35 reply. Do have that I attack, so just looking at that as a possibility, just wanting to see the volumes and the ticks turning down with the F and the E and the D and the J separation. That could be something that's very interesting, and it could break and breach that 56.75 level. If it does, again, it could bounce again, but we see, interesting, we saw at the 36 level we lost a lot of the integrity in the 3 minutes and the C bias there. Still have the separation in the I, but it's certainly not as sharp. So that possibly could have been just a bounce off that level. Volumes ticks, not in agreement really with the ones. The threes now have gone awry. The bigger picture still have the 10 minutes as the nicest ergodics there at this point in time anyway.
Notice that our attack charts are all decreasing. Markets slow down quite a lot. Decrease in volume for sure. I attack and H attack are showing that. G attack is starting to show that a little bit more clearly as well. So market's slowing down. It's worth noting that at the 9 o'clock point where we stop our session, that actually marks the beginning of the lunch hour on the Chicago Mercantile Exchange floor. And from about
here's a move through that level. And I just doubled up there in terms of compounding. Sorry, I just compounded. And just wanted to see about, and the reason why I compounded is that it broke through that 56.75 level and just got taken out at a 2-tick stop there. Sorry, just to recap that, I had been in there. We knew that I was in there tracking that just about a point ahead of that 56.75 level, or a point behind it, I guess.
So
as it broke through, there was an indication that it would move down further, and I just had a compound level below that and then locked in profit. Go ahead.
So at this point, sorry, I was just talking about the lunch hour. So the lunch hour in New York is at noon, which we're at 11:38 Eastern Standard Time right now, and in the next 20 minutes or so is when the market starts to slow down a bit, and we often start to see, actually, we can see on the H and the I, we're picking back up just a little bit. We're seeing a lot more sellers gain activity. So we're not hitting that lunch hour just yet, but when we get to the 9 o'clock a.m. Pacific time or noon Eastern time, it's the general lunch hour for the market. And even in Chicago, they'll slow down for that hour, and most often they'll have lunch as well. But it's generally from 9 o'clock Pacific time to about 10 o'clock, you'll see a good amount of just chill market conditions, really slow moving, not a lot of information developing in, and then after that it starts to pick back up. But just wanted to comment on that. As we get closer to 9 o'clock, sometimes we see volume start to drop, and in this case it started to drop and it may be picking back up just a little bit. Those 10s have held pretty faithfully for a very long time, And that range keeps getting deeper and deeper on the 10's most recent activity. Actually, now that I think about it, the most recent end of the 10 cycle was cut off by the end of yesterday. So that actually, even though normally that would be good information, that actually would not necessarily completely apply to the range that we're looking at with the 10s. So that G attack actually is showing red pressure because the lines are separating, and the red attack, or the red is getting even stronger. And even look at that H, the separation on that is prime, to say the least. So looks like
In the short term, we do have the volumes. Of course, the E-bias has now come way down, but we have that K attack, we have the L attack, holding it at this level, J up at the top there. Let's see once the volumes and the ticks cycle, as long as we don't lose too much of the depth of the E and the F and the D. As you say, we should see some nice movement with the 10s, the 3s, the C, the A. Just had 1140 plot and just a lot of information there. Very nice to see. And this might be another nice doubling or compounding situation to consider. It is opening up at the 1 point level, even just locking in one tick right now just for that.
also note that when we were talking at the beginning of the session, one of the first markers I put in on the day was at 69.50 going down, and that was following some of our shorter term trends, but also that was right around the same time the G attack crossed red. If you're a long-term trader and this is somewhat of a very aggressive way to look at the charts and to just
took a couple of ticks there, just locked in a couple of ticks on that compound.
And if you're looking at, if you were trading just the 10s and the G attack, and we had put that marker in back at about 69.50 when we noticed that trend start to kick in, you could have held it from 69.50 all the way down until now, until 54. And just on the information that the 10s, the A, and the G were all red and showing that the market was likely to push down over a long trend line. So just wanted to, so part of the goal of today was to share a lot of information, talk about the charts, talk about the information we look at when we're looking for how to make precise trades, but also to share a few different perspectives. We talked about scalping for the first part a little bit, talked about some mid-range stuff. We were talking about when Darren and I thought opposite, and we were looking at the 5-minute trends, 3-minute trends. And then now just going back, and of course, hindsight is 2020, but looking at the 10s and how they held for the majority of the day, today was a great day when the 10s showed that the market was going to go down, and they did. And the market did go down. So there are a few different ways you can read into the charts and feel confident in your trading. Also want to point out the way that we've been doing, or the way that we've been talking about putting markers in and just following to see what the market does. This is actually a strategy that's commonly used by traders in the futures market. When you're not sure about the market, or let's say you're low on sleep, or let's say you're reading some news that indicates there's maybe not a great day for trading. A really good, reliable system you can always use is to do test trades. Don't even have to open a simulated ladder. Don't even have to have your live ladder open. Just have a piece of paper in front of you. Say, right here, I think the scalp charts are all going up, and I'm a scalper, so I'm going to test this. I'm going to put a marker in right now at 55.50, and let's see what happens. If it goes up and it follows this trend, then maybe I have a little bit more faith in the market. Maybe I can take the next trade that comes in or maybe I'll take a couple more. And once I have 3 in a row in my pocket, then that's when I'm happy to make my next trade live, and then I'll put some money on it, because then it's less of a risk, right? I've had 3 to 3, then the fourth one has got a good chance of succeeding. Or if it's, let's say the marker's at 55.50 and it only goes through by a tick and then it turns around and maybe it's about to drop right now, which actually I would expect that it might, as the J attack can be crossing red kind of soon. Then you say, oh, well, that was a test trade. It didn't work. That's a good point for me to step back and wait. And then maybe I'll take another test trade in a few minutes when I see another good trend start to build up. Or maybe I'm going to take a break and I didn't get very much sleep. Maybe I'm going to go pour myself a cup of coffee and then come back in a few minutes and I'll take another test trade. And test trading is a really good way to A, build your confidence, B, test for trending on the market, and C, even measure the charts that you follow and their efficiency on that day. So just wanted to share that as well. We've been talking about it because we're theorizing, but it's a really good strategy to use in your day-to-day live trading. And then also, we're just getting close to the 11:45 mark Eastern time. And we had mentioned we're going to open up for questions. Now, if you've been saving any questions during the session, it's a good time to go ahead and type those into the question box. We can take directed questions. You can ask us about specific charts, what they mean, about different ways to enter and exit trades, about short-term trends, long-term trends. Other than that, we'll probably just keep going for the rest of the session. Again, our G, H, and I attacks all are showing a decrease in volume, so we're starting to slow down just here at the end of the session. Normal, to be expected, usually happens this way. We'll also be keeping an eye on those attack charts to see if they pick up at any point, which sometimes they do right before the end of our trading session. Interesting to note that those 5s have been well, pretty wishy-washy, but they're still green, even with all of this trying to push down, and those 10s staying pretty consistently red.
See what happens when our smaller charts turn, particularly the 1 minutes and the dissipation of the E and the F bias. 10s, 3s are still down, C, even B, even A, all still in red and angled down. So we have a pullback potential here right now at the 5-minute trend line, probably 58.50, 58 as the trend line for the 10 minutes. You mentioned that possible way earlier entry if you had been following the 10 minutes.
Here's that J cross. Just cross red.
Yeah, low down in the range, but certainly did cross.
K is coming in pretty close too.
Flattening. Yeah, 1's flattening. K, L possibility. V, volume and tick.
3s are staying down. Top 3 a little bit weak. C is definitely there. G, H, and I, red line certainly on top.
The ideal trail then, in terms of that 10-minute, would be having your stop following along on that trend line. So just above that trend line would have been the ideal trail for that, assuming that you were far enough in the profit level to be able to do that and still be in profit level. There was a range there where it went from 56.75. 56.75 was our low, range right up to 66 again. So that is a 10-point move, and so that would have been truly being committed to those 10 minutes, having your stop above that and sustaining in that time frame anyway a 10-point retracement. But in retrospect, as you've said, Brandon, overall looking back, that would have been something ideal. You would have been in around the 69 level and would have come down, touched on almost 14 points or so, and then would have suffered a pullback to just a 4-point profit level, and then another advance down to what would have been almost an 18-point profit level. So I think if I'm looking at the numbers
ideal is the understatement of the century. I know I'd be pretty happy with a 14-point trade. We have a question that just came in at 6:30. Does the software need time to collect data before the charts are accurate, or have they been collecting data from after hours? Excellent question, and you are correct. The software does need time to collect data from the open of the market. It does not run overnight. And also worth noting is that in the first half hour, coincidentally, there's often a lot of chaos. And the market is volatile. It'll move pretty quickly, even without any indication. And the reasoning for that is that when the market opens, there's just always chaos. There are people who have been holding on to their tickets overnight, and they run into the market floor in the morning first thing, and they say, all right, I'm selling all these. And it happens pretty frequently that it's just unexpected movement. So twofold that we start at 7, give the software half an hour to collect data, and also that we avoid any unpredicted volatility from the session or from the first half hour.
It's interesting, sometimes that first half hour you do see some nice trending, after sometimes 10, 15 minutes. Other times it is very chaotic. We did look at leaving the charts on overnight and collecting the after hours market. Obviously, 3 or 4 hours, have probably 4 or 5 hours previous the European markets were open. That does have a bit more volume in terms of the futures. But keep in mind that our 10, 5, 3, 1 minute charts are minute charts based on minute moving averages. And sometimes when we did collect the overnight data, that would skew those averages. And so we've decided, and well, not us, but more the developer of the software, he decided after much going back and forth that the better prediction or the better charts would only be when the U.S. markets are open. That's when the most volume is actually in the U.S. markets, and not to have other time periods where there's much less volume have an equal time weighting, if that makes sense, in terms of the moving averages.
A few other questions came in here. Will you be using these strategies in the morning sessions? Good question. Darren and Greg will be a little bit better equipped to answer that in terms of the moderated session. These are all things, valid things that I have been working with and writing down ever since January 1st, 2016. So personally, the answer is yes. I'm using these strategies in the morning. It fluctuates. I very often will do some test trades before I take anything live, at least one or two. And then I always will kind of try and wait until there's a larger change in the market. Like actually right now is a very good spot to put in a marker. I'm going to put it at 58.75 going upwards. That G attack is about to cross green. That'll be the second attack cross of the G that we've seen in the 2-hour session. The first one we saw made us drop 15 points. This one, we'll see what happens. Also, the 10s are at the bottom of their range, so we'll see what happens there as well. And for the rest of the day, or even in the morning session, but also related to the rest of the day as I trade for the full 6 hours, I will do some test trading whenever there's a little bit of unexpected volatility. But for the most part, I'd like to see a lot of information, and I like to see everything build up at the same time before I take my trades. But Darren and Greg would be better equipped to answer if they're going to be using those strategies.
It's I guess the answer is yes and no. The challenge is just from a moderating perspective, just whatever we're showing on the ladder, wanting to take as much of a conservative approach visually as possible. Oftentimes, if any type of individual is following what we're doing visually, i.e. tracking the same setups, they oftentimes will be individuals with less experience. And so the more
more comfortable one becomes with the charts, the more experience one does get in their trading experience. It may be things that strategies one wants to employ. And just going back historically as well, Darren, you can cut in here if you have some thoughts as well. In the very beginning, when we first started the webinars, we were only tracking setups based off the 10 5 ergs, and we had lots of setups coming in during that time. And over a period of time, the 10 and 5 ergs didn't have as many opportunities and setups that were coming into the market. We still looked at all the other charts. We went through a period then where we saw a lot of other setups and opportunities coming in on the smaller charts. We had the base 3, the base 1s, the scalps. Someone was mentioning that we haven't watched the attack chart before. We've talked about the attack charts. The K attack actually was part of our scalp setup for a long time, which we were tracking as a setup when we were tracking the scalps. And sometimes the market goes through different times and cycles where there aren't opportunities available for the setups that we were watching, and the a developer of the charts has always said there's many different setup possibilities in the charts, and we've only watched and tracked certain ones because we had lots of opportunity. Sometimes when the market goes through a different phase and some of those setups aren't as readily available, other people are saying, hey, what other setups are there that you have identified and watching and patterns that you've seen? And that's Brandon, has been watching the attacks more specifically since the beginning of January. There is merit there, just as there is merit to the ergs and bias, and certainly the attacks have always been there and just encompassing everything. We've noticed long term, and we've often talked about over the last several years, that when the G attack has a large separation, oftentimes there's a weighting to the market in that particular direction, just as if there's a deep A bias, regardless of what the ergs are. Oftentimes there's a weighting to the market as well.
And if I just further my thought there, just at the time I was managing that, Brandon had talked about putting a marker, and I just threw that in there at the 59 level. I actually ended up compounding that, putting it a point and a half ahead of another entry. If it did move through that level, which it did, and then ended up collecting about, I think collectively 5 points on that with the target that I had. You saw eventually that the I attack did come across in sharp fashion, took a little bit of time, had a little bit of a pullback before that did work out. And that was taking a little bit more of an aggressive approach to something that you envision happening.
Here it goes.
Here we see the market is still moving a little bit further. But to get back to that, go ahead.
Sorry, go ahead.
No, go ahead.
58.
I put it in it.
It's
Yeah, it was a 59 for you.
G attack cross, 10's the bottom, I attack cross, H attack cross all took place at 8:51 a.m. I'm tracking Pacific time. This is the kind of thing, since the last one pushed for about an hour, maybe an hour 15 minutes. The G attack cross showed pressure and it kept going that direction. I'll probably keep this marker there for the next hour or so and see how long the market trends upwards, especially since the 10s are at the bottom of their range as well. Good time to be seeing what happens. So I'll be holding that.
Keep in mind as well. Yeah, keep in mind as well, as it advances, you may want to just take profit. In that scenario, I compounded and I ended up taking 5 points of profit, which, on a daily basis, that may be enough without having to run the risk of enduring bigger pullbacks. If that's something that doesn't bother you, and certainly, as Brandon says, you continue to hold until your particular view of things have changed. We did see the I attack back off, and the C bias angle down, but we did see the 3s become stronger, as with the 5s, and very close had an H attack, though it backed off here a bit. But overall, you can see eventually those 10 minutes turning, but recognize that there could be a lot of pullbacks in between that fully materializing. Even a full 3-minute cycle as well could occur. Back to the... Go ahead.
If this was a live trade and I had entered at 58.75, know that I'm a trailer and I like to follow in right behind trends. And because of where the H and the I are right now, I would be uncomfortable continuing this. Even with the A bias not having turned green yet, that gives me a little bit of reason for concern as well. So because it's not concretely started its trend upwards just yet, I'd probably trail it. And once I saw that H and I weaken at the top of where the range was, I would have tightened my trail to about 3 ticks. So I probably would have been taken out at the 62.50 level. And from there, I'll probably just wait until there's some better information going upwards. Our scalps are all showing some downward pressure. So that'll be a moment to take a step back and wait for the trend to be even stronger. The G attack right now, if you're looking closely enough, it's actually not crossed exactly just yet. And that's also an indication that this could push down a little bit further before it starts its hike up to the top. So all little pieces of information that are important in making the most precise trades that you can do, and also to gain the maximum amount of comfort with your trades too. The more information you know, the better you always feel about your trading.
Yeah, you need to be comfortable for sure with what strategy you're doing. Just brings us full circle back to that question about whether or not we're looking at these particular strategies. The as I said, was yes and no. I think the yes in the sense of we're going to endeavor as much as we can. Even Brandon will probably come on if he sees things to mention them, to identify them, to draw your attention to them if those are in fact ones that you yourself want to track, or even as Brandon says, paper trade or put markers, or just sort of see how they test out. From what we do on the ladder, we want to tend to be and lean toward being a little bit more conservative, but there may be, as we see moment to moment, some relaxation of those that we've seen in the last number of days, even the last couple of weeks. Some of the less filtered setups work, i.e. 5-3 with an agreeable B or C. We've seen that as one of our older, less filtered setups, and a lot of those two-component bigger setups have been working quite well, even with the pullback and without waiting for a particular scalp pattern to be there. So there will be some nuances, but in terms of what's tracked on the simulated displayed ladder, but overall we will endeavor to speak about all of these kinds of things that we've been talking about today, so that if you're not observing those yourself or just haven't seen them, it'll draw your attention to that if that's something particularly you want to pay attention to as well. So
we've hit the 12 o'clock mark. Our attack charts have all hit the bottom. It's going to be a pretty slow market for the next hour or so, most likely. And that just about wraps up our session. If there are any other questions that you have, I'll be available by email. You can email me at brandon@avengetrading.com. I'll be on the webinar, of course, for the rest of the day, watching what the charts do and what the market does. But we'll be available for questions throughout the rest of the day. And of course, if you want to speak with someone, feel free to call the Avenge number that's at the top left corner of the screen on the dark gray bar. And that just about wraps up our session.
Well, thank you everyone for being here again today. Honorable Yellen is still speaking in her...
Still yelling?
Still yelling, okay. Yes. Actually, Mr. Scott looks like he's going at her in a very animated way. So that can finish up any time, probably over the lunch hour. Other times it's already finished.
Component scalp here coming in downward, just real quick.
Just the way he's speaking, it may actually force the market down a few more ticks. Anyway, thank you again for being here today. If you are on this afternoon, hopefully the market will stabilize, become a little less chaotic. We did see some nice trending opportunities throughout the morning. Great educational process in terms of everything Brandon's been watching and talking back and forth between him and Darren. I didn't get too much time to say too much here. They kept the airwaves pretty full this morning.
Sorry, Greg.
That was good. No, that's fine. As long as someone's offering some good information. I would have jumped in if I vehemently opposed what you were saying. But again, thank you everyone for being here, your great questions, your comments, and watch the angles on the ergodics, the biases, the sharp attack crosses, practice on your trading ladder. We'll see everyone back here tomorrow. Thanks.